Hello, everyone, and welcome to another episode of The Pragmatic Investor. My guest today is Ryan Wilday. He is the author behind Crypto Waves on Seeking Alpha and also part of the team at the Elliott Wave Trader. Now, today I had the chance to talk with Ryan again, and we followed up on a lot of the topics that we discussed a few months ago. We talked about Bitcoin versus Ethereum, the outlook for altcoins, especially in the face of all the regulation that has come out recently. Also, we talked about the altcoins from a technical perspective, as Ryan sees that a lot of these charts are now kind of dead in the water. But we also talked about some of the altcoins that Ryan thinks have more potential moving forward. We also discussed the outlook for markets and kind of a divergence between crypto markets and stock markets. Also, we talked a little bit about the timing of the Bitcoin cycle in relation to the halving. And to finish up, we also talked a little bit about gold, silver, alternative investments, and just in general, the idea of building a diversified portfolio to protect your wealth, especially in light of what Ryan and some of the people at the Elliott Wave Trader believe could be a long bear market that is coming our way. So, as always, I hope you really enjoy this conversation. Please go ahead and check out Ryan on Seeking Alpha or at the Elliott Wave Trader. You have the links below. And if you haven't already, please go ahead and subscribe to the podcast on Spotify or YouTube. And if you'd like to see more content and more of my stuff, you can also follow me on Seeking Alpha, James Ford, the Pragmatic Investor. And you can also follow me on Substack, James Ford, the Pragmatic Investor. And with that said, here is the podcast. All right, welcome back to the show, Ryan Wilday. Ryan, thank you so much for coming back.
Yeah, no problem.
All right, well, last time we talked was about a few months ago, back in May. And of course, a lot has changed since then, especially in terms of regulation, those kinds of things. Now, I don't want to rehash the argument we had last time about fundamentals against technicals.
Okay.
Let's just, but I will make a two-part question because I would like to start with this, which is basically where do you stand on a lot of the altcoins right now? Because to me, that's perhaps some of the things that has changed the most, in my opinion, since we last spoke. Both in terms, I think, of fundamentals and technicals, and I'm sure you have a lot to say about the technicals.
Yeah.
But what do you think about the altcoins? What are your thoughts on fundamentals, and then, of course, most importantly, what are the charts telling you right now?
I mean, I think I would argue I would take the state of technicals to actually be an argument against just trading fundamentals because I think the charts are terrible, to be honest. And I opposite from Bitcoin and Ether, which look great. They're in the midst of what we call a long setup and Elliott Wave thinking. And there's very few altcoins that I like in terms of charts. I think a better one is Aave, maybe setting up, but to be honest, it's not the best setup. I'm watching IMX, but they by and large don't look great to me. In fact, even Ripple after the news, I did take a trade after it settled down a bit from the first push, and then largely I consider it failed. So and I got out of the trade. I don't know. I got out like with a 7 cent difference between entry and stop loss. Yeah, I don't like it's, and I don't, I mean, I think the news, and I can argue that the fundamentals is really put us into kind of another level of nebulousness in terms of regulation. I mean, I think, we've got a good ruling that, is positive that, these things may not be securities, or most of them may not be. Ripple's not. I think if Ripple's not a security, hardly any of them will be securities because that was a very centralized. It's a company. It was basically a sale of a token to raise money for a project, which and so I think that's good. But I don't think that's fixed a lot of the charts. Okay. I don't see that, and I not to say that there won't be good trades, but I'm having a hard time seeing them. And I certainly haven't missed much. I am scaling into Aave. I don't think it's the best setup. Like I have a general rule that less than 10% of my portfolio is outside of Bitcoin and Ether. So I have very little skin in this game, but and the reason is because just from a long-term basis, most altcoin charts do fail from an Elliott
Right.
Wave perspective. So I just keep it, I keep a lot of my money scaling in and out of Bitcoin and Ether. But the other side from an Elliott Wave perspective, classically, it takes Bitcoin entering into a strong, we call it third wave, a strong push of liquidity for altcoins to come on fire. So I wouldn't necessarily expect it right now from a technical basis either. So I suspect we won't see a lot of altcoin fire until Bitcoin's over 50, maybe over 40. And I think some of them have already given up the ghost. Like there are, if you look at 3 years, so I've been doing heavy altcoin trading for 5 years. Every cycle, what's the big coins that we traded inside 2017? We don't trade them anymore because they're dead. I mean, their price action is dead. Then 2021, we had another set. Uniswap was one, and I use Uniswap as a protocol all day, not all day, but many times a month. But as a coin, I don't want to touch it anymore. I can go on and on. So that my problem with the altcoins is they're just not there yet. Anyway.
Right. Yeah, of course, that makes a lot of sense. Now, I wanted to get into kind of a bit of a technical question, and I know it's a little bit hard to visualize, I guess, maybe without a chart, but when you're looking at a chart and you're saying, okay, this coin is dead in the water here, what exactly from an Elliott Wave perspective are the kind of parameters that tell you, okay, this is no worth it?
I mean, maybe let me see if there's a quick chart to pull up. There was one I looked at the other day. Someone requested it of me. Yeah, I don't have it offhand. But when you have a strong cycle in altcoins, for Elliott Wave perspective, everything is based on 5 waves, right? That's our signal that a trend may be beginning. Over and over and over, many altcoins put in 5 waves during one cycle, but when they get into the bear mode, like with Bitcoin going into bear mode, it will retrace more than 764 of that 5 waves. That signals death. It's like it really has like I not like I've counted, but 99% probability if you retrace more than 764 of that 5 waves in a cycle, you will take out the whole thing and going to new all-time lows. It may take a long time. You may get a bull market that kind of saves it for a while, but in general, once you cross the 764 retrace, it's very rare. And I do this all in log, not linear. If you do it in linear, you'll see something different. But in log, you will 99% of the time never take out the all-time high ever again. And I mean ever again, at least based on a 5-year history. I'm going 5-year history back to my serious altcoin trading, which is 2017. So I would suggest anyone, if you take a chart, put it into log, get some log fibs up on TradingView, take the major cycle where it really pushed, and it was, and then see if it's crossing the 764 retrace. And I would give you very serious caution of trading it again. And just from a normal, you can, there's nothing really magical about these numbers, but what happens is you just have so much overhead resistance piled on top of it. It's like smothering, yourself with a stack of pillows. It's like there isn't much breath. And there's tons of sellers. All of the buyers have been, suffering liquidations if they're on leverage. You just have and we just call it technical damage. And so in general, I try to, as a discipline, once one cycle's done, the next cycle, I'm looking for another set of altcoins, because I assume most of the time, I'll look at some old ones. I mean, I'm still looking at Solana, because it hasn't retraced 764 yet. But those old altcoins, you can almost kiss them goodbye, and you need to look at a new set. And it's not based necessarily on hot projects, not necessarily based on what's the hottest meme on Twitter. I'm looking at things from more of just a constructive price action standpoint. So anyway, there's a few out there. I mean, Ripple, like you use an example, if you look at its price history and log and you have all the history, it actually never retraced 764. So it always has potential. But it's basically been in a 5-year range. It's not taken out its 2018 high. it's in a 5-year range, and so it's tricky to trade. I mean, it's a broad range. And so to me, any kind of, I see a range like that that's seems seemingly perpetual. I trade it till it's dies. So, if Ripple was down in its 2018 lows, and I see us in potential of a bull market broadly, then I would be buying at that lows because that's the bottom of the range. But if we started to approach to the 2018 high, I would be selling. So I just would trade the range. So I want Ripple a lot lower before I was to buy it, because right now it's just right in the middle of it, and it's not got great price action. Using that as an example, but so that one's a little different. Litecoin has a little bit more potential. Probably one of the few ones that might have a potential. I don't really like it. I don't really like the way it moves. Everyone just has. I also have my price action preferences. But like if you just look at all the meme coins, all of the hot DeFi projects in 2021, like I don't have anything good out of that whole set. Like I just can't. Doge tends to have a cyclical nature, so I always watch for Doge to wake up again. And you can buy gazillions of it, and become a millionaire if you want to, But and I don't trade that heavy in it. So there are still opportunities in some of those old coins. They're just rare. They're just so rare. Anyway,
right. The good thing about Doge is you also have it in the back of your mind that eventually it's going to become the coin used on Twitter, or I should say X now.
Yeah, that's what they say. I'm waiting. I think Elon honestly just like playing with people on that one, but yeah, maybe. Yeah, I mean, it's not so. I don't think I wouldn't tell anybody they're crazy if they took like thousands of Doge and just put it in a wallet and said, okay, I'll sell it if it goes up. I do tell someone they're crazy if they think they're going to make millions of dollars. I mean, I've heard endless stories of the all-time top was on Elon was on Saturday Night Live to the hour,
right.
and the people that didn't sell near that point of ultimate euphoria. It's kind of sad. I mean, I hear too many stories about, I had $800,000 in Doge, I had 1 million, never seen that money in my life before. I had it, and then it's kind of wiped away. And so I think those are sad stories, and I do my best to prevent that in my own life.
Right. Yes, definitely an important part of trading, as much as getting into a trade, also kind of knowing when to get out of it, for sure.
Yeah.
Now, you've mentioned a few of the altcoins that I also want to talk about. Litecoin, I think, is one that caught a bit of a bid. I think especially around the time that BlackRock issued that ETF application. We also had, I believe there was this kind of they call it like the Wall Street crypto exchange came out, and they listed Ethereum, Bitcoin, Litecoin, and I think a couple others. One of them, interestingly, was Bitcoin Cash, and that's seen some interesting price action. Any thoughts on Bitcoin Cash?
I couldn't give you I just think the chart looks terrible from a long-term basis. Doesn't mean that, again, all of these things that show at a long-term basis may show a good setup shorthand, like short-term. But they're harder trades. Like if you have a great, like trading Bitcoin on an uptrend is so darn easy because it has such a base behind it, if it ever starts to break major support, sure. So but trading Bitcoin Cash long is, I think it really is swimming upstream. Like it can work for a while. And again, I'm not, there may be some great Bitcoin Cash traders out there. Like I'm not going to say that if it fits somebody's skill sets, I'm not going to say they're nuts. But every time. So my life is every time there is something hot running on Twitter or excitement. Litecoin's happening. I think part of it's been Litecoin's halving's coming up or has happened. So I get lots of requests for it. So my life is lived in filling in these requests for my subscriber base. And often during times when they're hot, it's over day every day. I'm filling the same request on the same coin, and and I do my best to say, okay, here's where the trade is, but I also do my best to say, okay, this is a trade I would never take, because I think trading successfully is not just which trades you take, but it's which trades you avoid, even if you might miss out on some return. You have to I have 20 years figure out my own skill sets and what I'm good at and what I'm good at trading, and I find it so much easier to swim upstream. Like, where's the strong uptrend, and then where's a smaller uptrend within the larger uptrend, and you're basically just, it's like getting in a current, right? Versus something that's been, Bitcoin Cash has been largely downhill since 2018, maybe it had a little pop in the bear market of 2018. I don't remember, but you're just basically taking, if you take a little long trade in it, you're swimming you're swimming upstream basically. That's
Yeah.
extraordinarily difficult in my point of view, but some people don't mind trying to do it. I see the same thing with Bitcoin miners, like Bitcoin miners as stocks. I would much rather put my money in, if I had my Bitcoin exposures in Bitcoin, not to say I don't have any miner stocks, but they're all look really terrible from a long-term basis. And all of their moves off the recent lows are very corrective. To me, it makes perfect sense from a fundamental standpoint. There's just no margin there. If you look at their balance sheets, you look at their cash flow statements, they're basically financing their operations through the releasing of shares. So every shareholder's been diluted and diluted and diluted by them. So it makes a lot, even Marathon, which I think is one of the better ones, they basically diluted people over the last 5 years. I just don't understand, like from a fundamental standpoint and from a trend basis, why anyone would be overly excited about it. Again, I take trades on them. I take options trades on them. I trade neutral on them in options. I do all kinds of various things that fit my skill set. But again, it's not a trade that I really understand from a like a lasting perspective. Like I don't think it's a trade that you can buy and hold, for instance, in a way.
Right. No, it's definitely a very competitive market. I would say, I guess there is some sense if you believe, that the Bitcoin price is going to appreciate significantly, and these miners are issuing shares in dollars, but storing Bitcoin. I guess there's a case for that to be made that maybe it's fundamentally sound to an extent.
Yeah, it's just they yes, but with they have shown a very poor propensity, a very high propensity, but bad propensity to finance at the top.
Right.
Accelerate their buying of equipment at the top. And I think the miner that I would be excited about is the one that has some kind of market timing intelligence. And I mean, for Pete's sake, I've done pretty well. Hire me. Like, no, I'm not offering, but it's like it's ridiculous. Like that, when a miner actually, it's a great sell signal when the miners are borrowing to buy more equipment. It has been a very good sell signal. I haven't tested it. I haven't quantified it, but they're terrible at that. And so I would say, yes, you're right. If they weren't undermining themselves at the worst opportune time, if they were financing at the bottom and paying off their debt at the bottom, financing at the bottom and doing what you're saying, and then paying off their debts at the top, they would be in the opposite situation, right? And and then I would say even on top of that, they should be hedging too. I mean, gold mining companies, people criticize their hedging, but to be honest, like they have to deal with a commodity that trades in largely a range for many, many years, right? So hedging is sort of necessary. But those guys are smart. I mean, they should hire some commodity traders from the gold trading world to help them with that. Anyway, so that's just it's just again, I think you're right. If they could perform well, if their management could time the market a little bit better and be smart, sure, it would absolutely work out. But they just
absolutely. Well, it's human nature, I guess. It's kind of hard to get out of that kind of hype, and it's what happens.
Yeah.
I wanted to ask you also. So last time we also talked about that asset that you don't like very much, called GBTC.
Yeah.
I will say, in Grayscale's defense, I believe since we talked, it has kind of outperformed Bitcoin more or less. I think the discount's closed a little bit.
Yeah.
Just any new thoughts on that since
I mean, again, keep in mind that I own it, and I've owned it since 2017. So a lot of times when I bash something, I try to make sure I disclose that I own it. It's like, I will trade things I don't like. I just think the issue is, yes, everyone that betted, and again, that includes me, because I held some and added some off the lows, but I just split my bets on that one because it could very easily, either the court case coming up hasn't been resolved yet, and when the ruling comes, it looks to be in their favor, right? But again, these judges have their own mind, and they may come out against them. Second, the other thing is, I think again, I haven't heard this firsthand, but GBTC says even if the court case is in their favor and they have a clear path to a spot ETF, that they may not do it for a couple of years, which
Mm-hmm.
I know in 2 years we'll be in a bear market, right?
Right.
So well, I don't know that, right? I shouldn't say no. I should never say I know anything, but
Mm-hmm.
it looks to me like by 2 years, unless we really range trade for a couple of years and then pop later, it looks to me like we'll be in a bear market in a couple of years. So that's a really bad timing. So I think it just takes being really intelligent about it. I have an algo. I have an algo that I deploy in the service that that times GBTC buys, and
Mm-hmm.
it's been active in the service since 2020, and it's grabbed like 36 points per share, and during that time frame, GBTC's basically been flat. Actually, even when it was negative, it had grown. It had picked up like 30 points per share, over $30 per share over 2.5 years or whatever. And so GBC is awesome on momentum. I like the setup it's in right now. So I've been accumulating.
Mm-hmm.
But again, when I crap on it, when I make fun of it or list the risks, it's just me trying to push sobriety, basically.
Mm-hmm.
I think that if anyone's betting on them becoming an ETF, it could be it's no asymmetric bet. I mean, it could go very well, and I would be very happy for everyone who made a lot of money on that. And again, it's not like I'm going to be out of that. It's just I'm not heavily exposed.
Mm-hmm.
But at the same time, it can go very poorly, and then that's why I hedge my bets.
Mm-hmm.
So,
Right. Of course. Yeah. I also own GBTC, and yeah, I mean, I think it has some potential there for sure. So I like that idea that for a trade of closing that discount window. But let's dive into the let's say the meat here. Of course, Bitcoin and Ethereum, the biggest cryptos, the ones that you say the charts look the best. Bitcoin, it started off pretty bullishly, kind of last couple months maybe trading kind of a bit sideways. Hype has died down a little bit. Where do you see Bitcoin right now from a charting perspective?
well, the gestalt off of I would push anyone if they're interested in a deep dive just to grab my weekly public webinar, which let's see, it's the third it's always the third Saturday, and I'll do a deep dive on the charts. But I would say first of all, the the move off the 15,500 low was it November 22 is
Mm-hmm.
pretty sloppy. I mean, it's at a base level, it's sloppy, but and I'm at least looking at my chart here. It's not a chart that's presentable because it's kind of my sketchy.
Mm-hmm.
Um, the move off of the um, June low is a
Mm-hmm.
very nice move from an Elliott Wave perspective. Pretty clean 5 waves, and simply from since that high at like almost 31, actually almost 32.
Mm-hmm.
Um, on let's see, I'll give it a date, July 13th. Um, we've gone sideways, right? But that's very bullish to me after 5 wave structure, and I talk about the 764 all the time. This setup is very valid as long as it's over 26,130, or
Mm-hmm.
just call it 26,100. I mean, I don't worry about the exact numbers until we sustain below it. Like we start doing bearish consolidation below it, then I assume the support's going to break or stay broken.
Mm-hmm.
But basically that region, and it's even struggled from my perspective. That's actually going to that Fibonacci 764 is very normal for Bitcoin, and
Mm-hmm.
right now it can't even retrace 382. That's very bullish. Now it could
Right.
suddenly pick up some liquidations, get excited. People start, my general view of podcasts are they're either tired of the chop or just saying it's bearish. Right? We had great news out of the SEC, and yet we're bearish. Well, that's a great sentiment background for me to
Right.
say that I see a great technical setup, and then I see on top of it sentiment pretty lame,
Mm-hmm.
anywhere from malaise to fatigue to we're still in a bear market. I've heard, I mean, even recently, one of the podcasts, I won't name them, pretty important podcast, basically said they had a title, "We're helping you survive the bear market." I'm like, what bear market? We tapped just over 100% gain off of the 2022 low. Like, what asset has done that? I don't know any asset, like maybe some aggressive momentum stock, but so so Yeah, I mean, it's a pretty bullish setup. I mean, again, bullish setups break, but I'm just accumulating. Like I'm just using this to add. So
So let me see if I'm understanding this correctly. More or less, in your view, and feel free to stop me if I'm wrong. We had that initial impulse into about 32,000,
yep,
starting when we bottomed out, and then
yep.
we pulled back to about 24,000. Would that be for you the bottom of the wave two then?
I don't think it's hit wave two yet. I would like to see it high 27s, but it's extraordinarily sloppy from an Elliott Wave perspective. Sometimes charts just do that, and so and again, and corrective waves in Bitcoin often are. So I can sit there and I can give you 20 counts. I'm probably exaggerating, but I can give you 20 ways to count the move off 32. To me, it's unimportant from a trading tactic perspective. I know where support is 26 130. Any dip into that region closer, I'm adding more. And to me, I'm just dividing my cash flow. Like, this is how much cash flow I want to risk on the setup, and I'm just, every dip has got a portion of that. Typically, I pyramid a little bit. Now, when we get the impulse, off of that I can read as pretty clear, and where I don't, let's say it shows up at 27 800, like my ideal, or let's say it shows up tomorrow morning. Well, then I have material for a more aggressive setup, and then I might have some leverage. But I use the CME futures now since we're cut out of most leverage in America now. But that one's legit. So I wait for that true reaction. We had a strong reaction yesterday, but it doesn't mean it's going lower, but it largely failed as an impulse at least. It might form a setup via diagonal, we call it diagonal, which is an overlapping 5 waves, but which I will take if it fills in and it's clear, but as an impulse, it failed already. So Ether, I think, failed today, and so I think we should go a little bit lower. But again, just like I try to urge my subscribers, when the market is this messy, I'm not going to try to call the bottom. Like, tactically speaking, I see the gestalt. We've got a nice move in July. That move is retracing right now. We can't even get into like the 382. I think we've tapped 382, but we've struggled even to get that far.
Right. Yeah.
I can give you a level on that. Let's let me do a couple deletes. We've hit the 382. We haven't even got 50%. Again, it's very typical for us it would be very typical for us to retrace all the way to 26 300 in this type of setup. I don't think the market has the momentum unless we get liquidation, right? Unless we get a strong liquidation, I don't think we're going to 26.3. We'll see. If we do go to 26.3, I will consider it bargain hunting time.
And 26.3, just to be clear, that's based on the 76.4% retracement, is it?
Retracement of like that almost $32,000 top to the July 13th low.
Right. Okay.
Yeah.
Got it.
So and I'm doing it log. I mean, someone will get a different answer in linear. They're not too far off, but and then this setup basically aims at 54,000 from an Elliott Wave perspective. It doesn't mean it will hit that, but it should get into the high 40s at least, barring we turn into like what's called a C wave. Like, this is an AB, not a 1-2. But if it's a true 1-2, which it looks like to me, it should get in the 50s. But we'll just trail a stop. I mean, we'll just trail a stop below that. So if it doesn't get where we want it to go. So it's a really nice setup. Like, and again, I don't understand everyone. I can understand what I feel, which is I'm sick and tired of the chop.
Right.
One thing I've done over the last year is I've turned on grid bots to eat through a lot of chop so that I'm making some income during choppy markets, because I don't hand trade chop very well personally. I do some, but I don't do it very well. So I just turn on the grid bots and let it go, and then just give them plenty of cash so that I don't have to worry about, I don't have to stress about them. And then I don't have one on Bitcoin because I just watch Bitcoin every day. So I've been adding here and there. I've got things set on, like, some are automatic buys, some are me putting in an order when we get a nice dip. Any type of like little liquidation, it looks like a little liquidation, I start buying, and then then it pops right back up, and then sometimes I take a little bit of profit, but it's just, yeah, it's miserable. But I don't, over the Gestalt is a pretty setup, one of the prettiest I've seen since I don't know, like well, the one, it's pretty nice actually, the one in the March setup, that one, and that one actually just liquidated and then reversed fast. So
Right.
that
Yes, it's true.
yeah, yeah,
Yeah, kind of. It seems to be working both ways now, where Bitcoin's kind of refusing to go up, but it's also kind of like you say, refusing to go down. Really, not even reaching some of the more deeper retracement levels. Now, I'm curious because I know that Elliott Wave doesn't really, kind of deal with timelines, but you did kind of give us a timeline before. You said more or less in 2 years you'd expect a bear market.
yeah.
Now we're about, I think the halving is what, about March, May of next year. How do you think? Do you have any idea? How do you see things playing out in terms of the halving? Would you kind of expect a similar kind of cycle to what we've seen already?
Yeah, again, my criticism of betting on halvings is we have like what, 3 data points, right? Like that's how many
Right.
halvings we've had in the past, right? So I
Hmm.
question, but it does appear to me that we are setting up bullishly. I think it's fair to suggest that the halving could take us into 6 figures.
Hmm.
Then I'm just simply saying this is my target on the charts, and I'm equating it to looks like a reasonable timeline. You know, with my finger in the wind, right? Like
Hmm.
it isn't any better than that. It's just again, I trade price, I don't trade time frame. I don't have, I can't anyone tell anyone. Like I would have thought this correction we've had over the last 2 months would have lasted no more than 3 weeks, 2 or 3 weeks. And that's what I thought when we went into it. Like I was getting ready. I was getting ready to get my buys in, but we can't even go low enough to really make aggressive buying. So,
Hmm.
so like I don't have a magic wand in terms of timing, but it does look to me like we will probably go up and sideways into having. There's another scenario where we just run to 100K. And again, if I want to stick Elliott Wave into having timing, we run from here straight to 100K, and then we come down, and then right when the time when the high having hits, we get what's called a high B wave. But that high B wave would be like it could break over 100K. B waves in Bitcoin often break over the previous
Right.
high. It's very
Hmm.
common, and so you could break into like 150K and actually be in a bear market. You like
Right.
from an Elliott Wave perspective, you'd be in a bear market, but from a
Mhm.
trading perspective, you'd want to be long, right? And then it would be at a breakdown. But the big reason I expect a bear market is because 100K to it could stretch to 200. I mean, that's how big the Fibonacci's are up there. They're really far apart. Somewhere in there, we should be finishing the major third wave of Bitcoin that off of its genesis, basically. Like we should be, and then we should be into a larger wave four. So um, uh, it's interesting to me that there's a lot of like we're pretty bearish on the stock market. It could be in a major bear market now, or
Mm.
we've got one more push to go.
Right.
Uh, we could break out again, and then it just looks like a very tired market now. Um,
Yeah. Absolutely. That was going to be actually my next question because I know that obviously you focus mostly on crypto, but you are part of the Elliott Wave Trader, and of
yeah,
course you guys are looking at markets there as well. And at least from my perspective, or based on my own analysis, I'm kind of seeing, I know you guys like to say every chart on its own, and I'm kind of starting to see kind of a divergence, let's say, between Bitcoin and maybe something like the Nasdaq SPX, where Bitcoin kind of has a good setup to go up, whereas stocks actually have kind of a setup to go down, which is unusual, but we have seen it happen before.
yeah. I wouldn't actually call it unusual. I would just say we like again correlation comes and goes, and that's
Right.
why sticking to correlation as a trading device, unless you have a way to signal when it's valid, when it's not. Like I mean, if you think about the last 3 years, it used to be how did it go? I think 2018 people used to talk correlation with the SPX, and
Hmm.
I think then it was Nasdaq for a while, and then somewhere in the DXY came in there, or a reverse correlation to the DXY, and the whole thing with this shift in each one just goes to show that correlation changes. That's to me, that's the only insight from that. I think it's very interesting. Certainly, I think it's very interesting that I mean, they both have been kind of rallying, but really on different timeline. And then what I trade them both intraday. I trade SPX options daily, and then sometimes futures, and then trade Bitcoin. Not necessarily trading daily, but watching it daily. I tend to trade Bitcoin in a larger time frame, and it's interesting to me that intraday they've been often going the opposite direction, which was not really true over the last couple of years. So we have a different setup from a macro perspective in Bitcoin. We have a different behavior on an intraday. Again, all of that can shift next month. Like it's just that's the problem with making a strategy out of that is it may not be here next month. But I think it's interesting. Um, there's a tendency when we have liquidity issues in the general markets that everything goes down, doesn't even matter. Like I think I don't remember if I told you in previous site, but whiskey and wine went down aggressively the same day, and the Nasdaq crashed on March 12th, 2020. Which again, I wasn't into whiskey trading until after that, but I looked at the charts and I was like, holy smokes, everything was hit. Everyone. I mean, I can imagine that these folks are like raising money for whiskey holders are raising money for covering their stock market. But yeah, it's I don't know, it's fascinating. It's really all that stuff is super fascinating. But I think it's difficult to make a strategy off correlation person. So
Right, absolutely, yeah. Well, it's fun to at least think about these things, but like you say, sometimes it's a little bit hard to put them into practice.
yeah.
Now, I know that we probably already covered this in our last conversation, but it's been a while, so just to refresh, and if anything's changed, looking at Bitcoin, looking at Ethereum now, how do you see it playing out? Bitcoin or Ethereum?
I think the risk reward is in Ethereum right now, and that's based on the Ethereum Bitcoin chart. It looks like it's finishing a correction.
Okay.
So we kind of we're looking at. I'm watching for a turning point somewhere above 0.055. We're very close, right? So if it doesn't turn at 0.055, then I may be wrong. I have to look at the charts again, but it should get a turning point in that region. So I see the risk to reward. So from a swing trade, I mean, like my long-term portfolios, I favor accumulating Bitcoin. From a swing trade over the duration of this bull cycle, I prefer Ether in terms of swing trade. So yeah, it's slight preference.
Okay. Now, I don't know if I asked you this last time, but I'm sure since all of this stuff has been happening in the last few months, people might be interested to know, how do you generally take care of your Bitcoin?
Multi-sig. So I mean, I have a trading account and I have funds on exchange. It's gotten smaller and smaller in proportion to my long-term holdings. I mean, I think that as you gain wealth, you tend to be more protective, and so yeah, Bitcoin, for me, is multi-sig. I like to not talk about the vendors and all that stuff, but yeah, multi-sig, 2 device, different locations for the big bulk of it. I have some tucked away on private wallets that are a little like, I have different tiers, like trading, somewhat hot wallet, less hot wallet, and then full multi-sig. If I'm traveling or something and got in trouble, then no one can get it, that kind of thing. So yeah, so different levels of security.
Cool. All right, and again, I know that we're getting a little bit off topic, but I also like to get your thoughts. Gold and silver, because I'm seeing an interesting setup maybe in the metals.
I think, I mean, Avi's following that. He's got the charts. It looks interesting to me. There are some people that don't pay me for advice, but like friends and family that if they're I tend to, with those folks, give them kind of a large portfolio, and I've told people recently, favor metals a little bit, favor GDX in your stock accounts versus SPY. I think I say that cautiously because they tend to be widow makers, like a lot of failed setups over the last couple of years. But I've been accumulating GDX. I haven't accumulated actual physical metals lately, but it's on my radar. I think platinum, palladium is just really cheap. And I don't think they don't tend to trend very well over time, but they tend to be range trades. When they're lower in the range, like natural gas is super cheap right now. Like I would be thinking about natural gas stocks right now. And it's just looking at the chart from a multi-year perspective. It is just really, it's like basement pricing on natural
Mhm.
gas.
Yeah,
Uh,
absolutely. I'm
yeah,
happy to say that I actually issued that trade a few weeks ago to my subscribers on natural gas and doing quite well so far.
yeah.
Yeah.
Um, yeah, and I know I'm not a heavy futures trader, but like I sell options on UNG, which again is a kind of a crap asset, but
Hmm.
I use option selling to get my price down, my cost down.
Mm.
That's my way of trading because I don't the futures to me are tend to be a little bit aggressive for my stomach, but yeah, no, I think natural gas and the natural gas stocks are a great deal right now. Yeah, so I mean, I think diversifying. I mean, there's some high dividend stuff up out there. I mean, the problem is we hit a real bump in the economy, dividends will drop. But
Hmm.
there's a lot of we see stocks now, preferred stocks that got 15% yields. I think you have to be careful with it. But if the interest rates start coming back, those you're going to see a lot of big principal gains in that. I think they need to be treated like a bond, which is a different way of trading.
Hmm.
A little bit about bond and yield trading from my MBA, and so I do some of those old skills. But yeah, it's there's a lot. I think there's opportunities out there, but yeah, I mean, I think we're going to have headwinds in the stock market at least in the
Right.
future.
Yeah. So I guess your strategy kind of now is, let's say, geared towards building a portfolio for that bear market to an extent.
I do regular. So we have this service putting out a plug a little bit here, but we
Yeah, go
have
ahead.
this guy Leo Valencia who has a basically a neural net on SPX options, and I trade signals from. I derive the signals. I mean, the signals are given. He doesn't actually trade them. Some of us have done some data mining, and I've worked off some of that, and it basically has a signal once it takes. It's like a 5-day trade in options. So there's a lot of shorts. So like a lot of short trading right now. And they've been very profitable. So that's a big hedge to me. It's pretty sizable trading. Being cautious about it, and then yeah, any stock that I get some profit in right now, I tend to cut it back. And
Hmm.
then honestly, my mentality around bear markets is how cheap can we go? How cheap can I get stuff?
Right.
I try to reserve cash. I look very close at my personal
Mhm.
cash flow, and I don't rush to put it into stocks. But if when I get some sales, like I don't mind accumulating. Like, and then some of it's going to be old world, like Ford Motor Company. Everyone's bearish on it because Tesla's taking its lunch. Everyone hates the Ford Lightning. Well, the chart
Right.
actually, from a long-term perspective, looks pretty good. I just wanted it heck of a lot cheaper. Things like that. So I do
Hmm.
a lot of boring old stuff because I can't have all my money in crypto, right? Like I've talked about my wine and I've got metals, I've got wine and whiskey, I don't know if you know about Masterworks. I use that platform, which is pretty cool. So it's
What's
basically
that?
buying shares of fine art, like
Okay. Yeah, I think I've
got
heard about
Banks,
that.
yeah, Banksy's on there, and some of our older Andy Warhol and stuff like that.
Hmm.
They've collected a lot of old art pieces just to hedge because that stuff does better in a bear market than
Right.
stocks.
Those kind of real assets. Yeah, they
Yeah.
tend to do well. Bit of wine. Anything interesting then in the whiskey market right now?
I have just it was my best performing asset of 2022. And there's an outfit, Whiskey Invest Direct, in London. It's just hard to get some right now. Like the market is all bids.
Mhm.
There's hardly any offers, and it's difficult. So there's a U.S. Outfit that I started using, Vinovest.
Okay.
They're getting into American whiskey, and American whiskey hasn't tended to have an investment market, but they're learning from the Scots and the
Mhm.
Brits, and trying to create an investment market there. And they just had an exit. They had an exit of a bunch of cash in 6 months, 30% return. I was not in that exit, but yeah. So there's stuff there. I'm just still like it's just the stuff that I was investing 2022. I can't get anymore. Which that says a little bit like a lopsided market, right? The prices
Right.
will probably come down, right? When it's like that, eventually the supply will pick up and the prices will come
Right.
down.
Exactly. Sounds like the money now is in making the whiskey, right? We should open
Yeah,
our own distillery, perhaps.
yep, and bottling it and labeling it. Make a whiskey brand. I don't know, but uh, yeah, I mean, but it's fun. I mean, and there's opportunities to learn, about finer liquids and drinking some of them too. So I've collected some nice wines, for myself, just for consuming too. So it's just been fun, kind of learning about these things. I was never really a wine person, and I've been learning a little bit. But yeah, no, metals. I mean, I think again, metals is a good place to just get some safety. You know, um, and I think Bitcoin. Like I mean, if unless the internet goes down, like if we got some banking crises going on, when we really get smoked in terms of the economy, which will happen, it always does.
Right.
Bitcoin will be nice to have, right? It'll be nice to be able to transact with banking goes out. So yeah.
Right. Absolutely. Definitely agree on that last point. Anyway, Ryan, it's always a pleasure having you on. Thank you so much for taking the time to coming on. And just like last time, go ahead, let everyone know where you are, what you're doing, and where they can find you.
Yeah, I mean, again, first I would recommend if you want to just learn about what I do on a real detailed basis, follow me on Twitter at rwilday, RWILDAY. Again, the third Saturday, unless I'm traveling, I do a free public webinar, and it's the same one I give to subscribers, paid subscribers, every week. And then if that interests you, then you can sign up at elliottwavetrader.net or go to Seeking Alpha and join in the marketplace, Crypto Waves. It's basically the same service. You can just have your preference of platform and figure out where you want to do it. And again, you can try us out, and not high pressure. We've got plenty of subscribers, but yeah, I mean, and I think first thing people learn is I care about subscribers making money. I can't manage anyone's portfolio. I can't give them personal advice, but I can teach people the principles of trading and using analysis appropriately, given that markets are always a bit uncertain. So.
Absolutely. Well, like I was already said before, I'm a big fan of the work you guys do at Elliott Wave Trader. So, personally, I can't recommend your service enough. I think you guys do great work over there. So, I encourage anyone listening to go ahead and check it out.
All right. Thank you.
All right. Well, thanks again, Ryan. And, hope to do this again in a few months when Bitcoin's around 60K. And,
yeah. It's 50. Let's talk.
All right. Awesome. I'll set an alert on my phone.
All right. Talk to you later.
Right. Take care, Ryan. Bye-bye. Thank you once again for listening to this conversation with Ryan Wilday. If you're still around, I take it that you enjoyed it. So I'd like to once again remind you that you have the option to receive more of my content if you subscribe on Spotify. I do a weekly weekend video where I cover everything that's happened throughout the week, giving actionable investment ideas, covering the macro, looking at charts, and I put those out every weekend. You can subscribe directly on Spotify. Alternatively, you can also follow me on Substack. There's plenty of free content there. And for subscribers, there are also available the same weekly videos that I just mentioned, and also weekly macro newsletter. So around Tuesday, Wednesday, I also put out a macro newsletter where I write about everything that has happened, and again, investment ideas, technical analysis, and all that good stuff. So you can go ahead and check out my Substack on the description, and that's all. Thank you very much.